Making a quick video on a trade that I missed this morning and walk you through the thought process here quickly. Um, Looking at the market profile here, so just going into the day, we are more long bias because we had a gap up. So you see, this is yesterday's settle. This is where we opened. It's a gap up, right? So just right off the bat, unless we see a pretty quick correction back into the prior day's value, you assume that we're going to be gapping up, right? We just have higher odds of going higher. An A period, if you didn't catch that long, I mean, that's still somewhat of a risky trade. You don't really have a whole lot of information to base a long off of right here, except for, just the fact that we had a gap. Uh, but if you did miss that trade, which to me is going to be a little more risky, what happened was you see in B period here, we just had this crazy rally higher and then came right back down into value. So one of Jim's concepts is if what should happen doesn't, right? When B period broke A period low, the expectation is we're going to be moving down into the prior day's value, or we're just simply going to be heading lower on the day. Uh, what you want to see, if we do have more confidence to the low side, is B period just simply continuing lower, or at least chopping around inside the prior day's value. The hint that you had that we were likely not going to be going into prior day's value anymore, or the hint that we were going higher, is when B period came back up to A period low, or maybe even the open. Those are pretty close to each other. If we were going to see continuation lower or just sideways action for the rest of the day, B period would not have come back to the open right here. Okay, so that's the thought process. It's what should happen doesn't. If what should happen is B period breaks A period low and we continue lower, it's great. If that doesn't happen, then the opposite is usually true. And what we had on our side at that moment is the fact that developing value value was developing higher. You can see this is the 70% bracket right here, and it's just simply higher than yesterday, right? So you usually, like 9 times out of 10, you want to take a trade in the direction of developing value. So coming back into range right here, that would have been an aggressive short, and you want to get paid for that quickly, just because value was still developing higher. Kind of a harder concept, more nuanced, just because we at that time we only had A period and then maybe even half of B period to of developing value up here. So it'd be much easier to drag value down into the prior day range. But either way, I mean, I guess a safer trade would have been when we broke above prior day high, simply because if we were going to be going lower or sideways, you don't want to see price come back to prior day high. So there you had, we came back and we broke A period low to the upside. We came back above the open, and then we came back above the prior day high. Those are all signs to go long, at least for a short-term trade. Yeah, hope that explains that. That was the missed trade today. If you can see on this side, on my price action on the 3 minute, right here, prior day high was paired with this high delta right here. Didn't have the most volume, but you did have a crazy push relative to the rest of the day in delta, which was just an added confluence that we were going higher. Some knocks on the trade going long would just be the fact that we were going into territory with weekly open, weekly high, monthly high. So a lot of potential areas of resistance. But either way, it was a long trade, and a long trade that you didn't want to get greedy on, just because on a better day when we have greater odds of a breakout, you see price basically move up and never look back. The fact that we looked back just means any long today, you would want to realize profits sooner, just because the confidence that we're going higher just isn't there.